Yo, welcome back. So, today I didn't take a trade, or today I didn't take a trade. Not because I didn't see a setup, but because I was shopping with friends for things we needed to get for our vacation. So I wasn't trading today. It's like for a few days where I don't trade, and today was a day that I didn't take a trade, or I didn't really look at the charts because I was like having a day off or something. But yeah, this is what happened. This is how I could have taken a trade, and I probably would have lost today, actually, because basically what I do is I wait for a 10-minute break of structure, or I figure out what the daily bias is first. So we're still reaching for this all-time weekly high, or just a weekly high, and we have weekly high right here and daily liquidity right there. So I marked that out. Didn't mark this out because we already swept that right there. Then I go to the 4 hour, then I go to daily and I look what the bias is saying. So we're still daily, we're bullish. On the 4 hour we're actually bearish because we broke structure with this candle, so we're bullish from this candle. So what does this mean? That we're bullish, that we're bearish on the 4 hour. That means a daily retracement. So a daily retracement for it to go up again. So where is equilibrium? Right here. So equilibrium was right here. So right there, that's where we're aiming for. Yeah, right there. So we want market to sweep this liquidity. So this equilibrium comes in line with this 4 hour low. So that's perfect. So you mark that out. Then we go to the 2 hour, and we see on the 2 hour actually bearish as well. Because this is where market open in this line, we're actually bearish as well. The 1 hour, we're actually bearish as well. So we're all bearish, so what we're aiming for is this right here. So now we look for an entry. So how do we look for an entry? Is some sort of buy side liquidity sweep, a buy side order block that's formed, and then rip structure to the downside, and that's our entry. So what I do is I look right here. It's on all these hours are bearish, 30-minute bearish as well. So yeah, well, 1 hour bearish, 30-minute bearish, 20-minute we're actually bullish, or we weren't yet, but on the 50-minute we were, or no, we weren't yet. On the 10-minute we weren't yet, but on the 5-minute, yes, we were. And then we see that we all have this. And this looks on this time frame, probably in a bigger time frame, it looks like a big fair value gap. So what you could have done right here is have it like right here, where it was like this, and this is the 30-minute probably, yeah, and the 30-minute comes in line with like this fair value gap. That's the only fair value gap there is. But if you zoom in, then there's on the 20-minute, from the 30-minute to the 20-minute already, there's another low right there. So there's actually another equilibrium right here. So when I have this equilibrium right here, I look for a fair value gap above the equilibrium, or yeah, fair value gap above the equilibrium, and we can't have this because that's too big of a fair value gap. So we zoom in and we look for another fair value gap. So right there. So right there, that's above equilibrium. You could have been more precise and been probably even with like right there. That's like perfect above equilibrium, and you could have done it like right there. Yeah, expected, but let's just have it like right here. Looks better. So we have this, and then I have all that marked out, and then I look for 10-minute liquidity on the upside, because we want to sweep upside liquidity then for it to go down. So we have a low right there, a low right there. Let's just remove this. So 10-minute liquidity all there, and 10-minute liquidity all the way up here. So we have this fair value gap, we have 10-minute liquidity. Now we look for an order block. So where's this order block? It's a pretty big order block, but it's right here. So it's pretty big order block. You could zoom in, maybe have a clean, like a better order block. So it's still on the 7 minutes, still right here, right there. You look on the 5 minute, and the 5 minutes actually right here, because this very broke structure. You look right there, and on the 3 minute you could actually where did it break structure? Yeah, no, oh wait, no, this is actually wrong. Wait 1 sec. So 7 minutes right there, and on the 5 minutes even a bigger one. So the 7 minute is like, look, on the 5 minute it already broke structure like right on this candle. So it's an even bigger order block. So right there, it's probably where we could max out our order block. So let's see, yeah, or maybe here. 30 minute, of course, like right there. So that's like this our order block maxed out because the here's red broke structure. So that's the maxed out order block. I did it wrong there, sorry. But yeah, then we look for a alright, so we all have this marked down now. Now we look for market open, that's right here. And we look for this liquidity to get swept, then break structure. Or this liquidity to get swept and then a break structure. So 3 10-minute highs that we marked out. So we're here, we went through it and we didn't break structure. So you can see it candle down, we didn't break structure, so delete that. So here, another low, 10-minute low. We went up and we didn't break structure yet, we did here. So right here, so this is probably where I would have lost the trade, because look, this is perfect. It comes in line with this survey gap, it taps into the order block and sweeps 10-minute liquidity, and it gives a break structure right on this candle. So right there is probably where I probably would have entered. So like right there, I probably have my stop like right here, and then 500 pips. So right there, and the first target that I would take would probably be like, let's look at 5 minutes for a cleaner TP. Yeah, we're on a 5 minute, and probably I would have targeted right there as first TP, and then second TP right there. So that would have been a 0.96 we're still work, but actually what happened is market so broke 1 minute structure right there, and market went up and stopped you out right here. Oh, actually news as well, so that's probably alright. So on 4 PM, so that actually would have been news. I didn't see that. Probably when I would have been on a charge, so when I would have taken a trade, I probably would have seen this. I probably wouldn't have taken a trade, but still, probably why I lost the trade, because of news right here. That's pretty cool to see that news probably stopped us out right here. Look, so this candle, but yeah, even if you lost this trade, then I probably would have called it a day. But still, market went up and swept another 10-minute liquidity right there. Still respected the order block, gave a bigger structure. So probably would have been the best thing, just wait for news on this candle, then just wait for a bigger structure maybe to the downside, because it all respected this. If a candle was like all the way up here, then it disrespected the order block, but it didn't. So it respected the order block, respected the survey gap on bigger time frames probably. Yeah, it was. So yeah, probably best way was wait for news. We're stop loss above here, and then 500 pips. So again 500, and then look for targets. So go to the 50 minute now. No, 10 minute maybe. No, 5 minute again. Right. So first target probably. This probably would have been safe. If we zoom out, probably would have been safe right there, because news just dropped, and maybe this would have been a first TP. Second TP probably would have been, or maybe these two equal, because if it breaks off a order block, it gives a pretty strong reaction most of the time, even after news right now. So probably first profit TP right there. Second TP maybe right there, and then third TP would have been this equilibrium and this low. So that would have been perfect. So that would have been the trade, and you hit like 2 TPs. So pretty good trade then. So it's pretty fun to, or pretty cool to see that I probably would have got stopped out if I took a trade. That I would have got stopped out by news, but even though I didn't take a trade, I probably wouldn't take a trade because I probably would have saw that there was news. So PMI and George job openings. So that's good to know for next time. Pretty big candle. I will take a note of that. And yeah, that probably would have been the trade right there. So pretty good trade if I would have taken this. Yeah, so nothing lost today, nothing won today. I am gonna be trading tomorrow, I think. Let's see, tomorrow we have non-farmer employment change. Alright, so this is 1 hour and 50 minute in pre-market, so 1 hour and 50 minutes before market opens. So I'm gonna see how market reacts off of this and how the volatility is gonna be after this. But yeah, probably I'm gonna take a trade tomorrow. So yeah, that was the trade. I didn't take today, and actually pretty clean trade if you took it. But yeah, I'll see you guys tomorrow again. Bye.